Hello everyone, I am Ankush Shedimar and welcome to my YouTube channel. Today we are going to cover Essay 200, Essay 210 and Essay 230 in a very detailed and crisp manner. And let me tell you first of all regarding these three essays. So about these three essays, ICA says that these three essays are already in detail discussed in your CA intermediate level. The application part of above essays will only be discussed at your CA final level. So what I have done is I have taken your CA intermediate module. I have identified what are the standards that are covered, what are the parts of the standard that are covered in your intermediate module, and out of those parts, what are the parts that can be asked as an application based case study. I have identified those parts and I have included that in your CA final audit concept book. So which means that you don't have to study anything other than everything that I am covering in this concept book. Trust me, because what are the purpose of the audit documentation, what is the NT of the audit documentation, that will not be asked by ICI, because application based questions only will be asked. And in the new course I have also seen that whatever questions ICI is asking from these three particular standards are on application basis only. Okay, yes sir. So we are going to cover everything that is relevant from this new concept book which we have made, and we are going to cover all the tricky questions as well in this revision video itself. About this concept book, you can definitely watch a detailed video by converting that language to English, so that you can able to understand everything that we have done in this new concept book. We are also going to mark important topics while with the revision video itself, so you do make sure that you are watching the revision video till last. We have also made your handwritten notes. In this handwritten notes, we have made handwritten notes in a very colorful way, and we are going to discuss all your memory techniques through some flow charts, and we are going to make you learn all the keywords, not through mnemonics but through a memory technique, but through storytelling. We are going to do that, because I am not very fan of a mnemonics where you get confused into many different things. Okay, yes sir. This handwritten notes can be found over on our Telegram channel. And everything, please subscribe to our Telegram channel, because all the handwritten notes are uploaded on the Telegram channel. And after uploading this video, I will be asking an MCQ on the Telegram channel that you have to answer, so that there is a comprehensive coverage, comprehensive solution for your CA final audit syllabus. And do ensure that you subscribe this YouTube channel itself, because we are going to post more revision videos in English. The first revision video we already posted yesterday of SQC1 and SA220. Today is this revision video, and more revision videos are coming up in English on this YouTube channel. So do subscribe to this YouTube channel. Like the video to mark your attendance, and comment down CA with your name, so that you make a manifestation that you are definitely going to clear your CA exams in your CA final attempt. Lastly, I just want to say, if any topic is very difficult for you, then please stop the video and do a self study, because you know that with the revision video, self study is also very important. And if you have any queries, any questions in all the topics that we have discussed in this revision video, then directly pin in the comment box, directly jump in the comment box, so that we can definitely, I will resolve your query in the comment box, and then other students can also see those queries and the resolution, so that they can also clear the doubt. Okay, yes sir. Now without wasting any further time, let's start with our first essay, that is your Essay 200. What does Essay 200 say, sir? It talks about the overall objectives of independent auditor. We are not a normal auditor, we are an independent auditor, and the conduct of audit as per essays. Essay 200 says that we have to do our audit as per essays. How do we remember the name, sir? 200, here also 00, overall objectives of independent auditor. Now why this particular standard was issued by ICI? So that the auditor knows the purpose of audit, so that we know at least what is the purpose of audit, what is the objective of audit. And here in this particular case, I am not going to discuss the basics we have already covered in our concept book itself. The first chapter is our basics chapter, so you can definitely read all the basics from there. We are just going to read the actual essay content in this particular detailed revision videos. Okay, yes sir. Now let's talk about the objectives and objective. What is the objective of an auditor? The objective of an auditor to obtain reasonable assurance. We don't have to obtain absolute assurance, we just have to obtain reasonable assurance, just a satisfaction that the financial statements do not have material misstatement, which means we can say that the financial statements are prepared as per AFRF. And is the reasonable assurance will be kept with us, or we should tell to the users as well? We should communicate this reasonable assurance with the users as well. How we will do that, sir? By reporting as per essays. We need to prepare a report as per essays. And why we are reporting, sir? So that we can increase the confidence of users in the financial statements, so that the users start trusting the financial statements. Okay, yes sir. This is the basic objective of the audit. Now here, why we are giving only reasonable assurance? Why we cannot give absolute assurance that the financial statements do not have material misstatement? Because there are inherent limitations of audit. What is the meaning of inherent? It is permanent. These limitations are permanent. It cannot be removed. They can only be reduced. Now whatever technical terms are used by ICI, we have already given a simpler language, a simpler term in your concept book itself, like permanent, so that you don't have to Google it every time. Okay, yes sir. So what are the inherent limitations of audit? The first is not in the audit but in the financial reporting process. The process of preparing the financial statements is called financial reporting. So that process itself has some inherent limitation. What is the inherent limitation? Management uses many judgments in preparation of the financial statements, like accounting estimates, provision for litigation of claims. It may happen that the provision is of X amount and the outcome is of Y amount. So there is a management judgment that is involved. Next, the inherent limitation based on which the processes are prepared in the organization and the financial statements is ultimately prepared. Then inherent internal control has inherent limitation. So management might think that the internal control is working correctly, but it may happen that the internal control is not working correctly. So internal control itself has an inherent limitation. That's why there is an inherent limitation in the nature of financial reporting. Secondly, the timeliness of the financial reporting, the time when from the origination of the transaction until the preparation of the financial statement and doing audit, then the relevance of the information, the importance of the information is decreasing over time, which means what? It is just an example of a newspaper. The yesterday's newspaper or day before yesterday newspaper is not of a relevance to us right now. So the information, the relevance of the information, the importance of the information decreases over time. So how it is a limitation? So basically we have to always obtain a relevant information, what do we say, the important information every time, and the cost of obtaining the information is very high. So we need to create a balance between the relevance of information and the cost of obtaining it. For example, sir, suppose in the third year I am doing the audit for the 2 years, and in the third year the client has decreased our audit fee, so we have decreased our resources, and now in the third year we are saying that we will not be doing TOC. Why? Because in the first 2 years the TOC has generated very good results, so we think that the internal controls are operating effectively. But what if in the third year itself the controls have been weakened, the controls have been changed, and we did not got to know about it because we didn't perform the audit, because we didn't perform the TOC, because we didn't wanted to obtain that cost, we didn't want to incur that cost. So we need to make a balance between the information and the cost. Okay, yes sir. Next, there is a limitation in our audit procedures itself. What is the limitation, sir? There is a practical and legal limitation for obtaining sufficient and appropriate audit evidence. In terms of practical, we are not testing all the transaction, we are just testing sample size. So what if the sample is correct but the other transactions are incorrect, and we are not knowing, getting to know about it. Secondly, in terms of legal limitation, if the management is not providing us any information, we cannot force the management to provide us the information. We can just report in our audit report that the management has not provided the information. So this is also a inherent limitation of the audit procedure. Next, even after doing the audit, the financial statements are affected by future events and circumstances as well, and we are not astrologer to predict any future events and circumstances. There can be any negative, adverse, uncertain events that can happen in future, and that can affect the going concern of the entity, and we cannot predict that. And lastly, audit is not an investigation. Had it been an investigation, I would have forced the management to give me all the information, but this is not an investigation. We do not have legal powers. We cannot examine the management on oath. That's why there is an inherent limitation of audit, and these are the 5 inherent limitation of audit that we have just discussed. How we can remember that? 2 inherent limitation are of financial reporting, 1 is of audit, because audit is not an investigation, and the future that we cannot control. Okay, yes sir. Okay sir, so now there are inherent limitation of audit. So what we will do is we will not obtain any evidences, and afterwards if there is any fraud found, we will say that there is an inherent limitation of audit, so we were not able to obtain audit evidence. Can we do that? No. The ICI is very precautious in this particular case. It is saying that the inherent limitations for audit are not a justification for an auditor to obtain less than a persuasive audit evidence. What is a persuasive audit evidence? Convincing audit evidence, sufficient and appropriate audit evidence, which means what? Even if there are inherent limitations of audit, you will have to obtain sufficient and appropriate audit evidence. That's what ICA wants to say. But sir, I have obtained persuasive audit evidence, but even after obtaining sufficient and appropriate audit evidence, there was a subsequent discovery of material misstatement, which why as an auditor I was not able to identify. Then will it be called that I was not able to do audit as per essays? No sir. If I have the documentation, if I can prove that I did my audit as per essays, then I will not be liable over here, even if a fraud was found, because we only give reasonable assurance, we didn't give you absolute assurance. First is this. The next MCQ that was asked by ICI is, if you have found that internal controls are very satisfactory and there was no suspicious circumstances, you have obtained all the evidences, and afterward there was a fraud that was found in the internal control, will I be responsible for that? No, provided I can prove that I have performed the audit as per essays. This is the condition. Okay, yes sir. Now there are certain assertions, or there are certain matters in which particular case the difficulty of detecting the material misstatement is significantly higher. Like in these particular circumstances, it is much difficult to detect a material misstatement. What are these circumstances, sir? Look at over here, how you will remember that. 4 circumstances are there: 240, 250, 250, 550, 570. What it is? 240, which means fraud. So there is a fraud that is done by senior management. I may not be able to identify that. There is a fraud in which there is a collusion. Everyone is saying very false things, very wrong things. So I will not be able to identify that. In terms of SA 250, there are many laws and regulations that are applicable on the organization. So entity might not be complying with any of the law and regulation, and I might not be knowing about it. Next, in terms of SA 550, management is the one who tells me who are the related parties. Suppose management is hiding one of the related party, I will never get to know about that it was a related party. Next, in terms of SA 570, there are future events or conditions that may cast significant doubt on entity's ability to continue as going concern, and I will not get to know about these future and events and conditions because I am not an astrologer. So these are the events or circumstances. You can say these are the assertions or matters in which the possibility, the difficulty of detecting a material misstatement is much higher because of the inherent limitations of audit that we call ILA. Okay, yes sir. Chaliye, let's discuss it from the concept book, whatever we have studied till now. So we are doing revision under revision. So it is SA 200, overall objectives of independent auditor and the conduct of audit that we have to do as per essays. What is the objective, sir? The objective is very simple. We have to obtain reasonable assurance that the financial statements is not containing any material misstatement and the financial statements are prepared as per AFRF, and we have to take that reasonable assurance and we have to report to the users of the financial statements so that we can enhance the confidence of users in the financial statements. Now there are inherent limitations of audit. This is an important topic. What are the inherent limitations of audit? First of all, we cannot obtain absolute assurance that the financial statements does not have material misstatement. But mind you, this is not a justification for you to obtain less than persuasive audit evidence. You have to obtain persuasive audit evidence. Now what are the inherent limitations? First is your nature of financial reporting, which means what? In the financial statements there is a limitation that the management make judgments in the financial statements. The internal control based on which the financial statements is prepared, the internal control itself has their inherent limitations. Next is what, sir? Next is your timeliness of financial reporting, which means the relevance of information, the importance of the information decreases over time. So there has to be a balance between the cost of obtaining the information and the relevance of information. We cannot do that. We are obtaining just the information without caring about the cost because we do not have unlimited money. Okay, yes sir. Next is regarding what? Next is regarding future events. Next is, you can say, audit procedures. The nature of audit procedure itself, like there are practical and legal limitation. Practically, we are doing sampling. We are not testing all the transaction. So it may happen that the sample is not very good. And secondly, in terms of legal, we are not an investigator, which means what? If the management is not giving us any information, we cannot force the management. And the fourth inherent limitation is this only, that we are not doing any investigation. And lastly, about future events or condition, there can be any negative future event that might affect the entity's ability to continue as going concern, which we will not be able to predict because we are not an astrologer. Okay, yes sir. Now there was an MCQ in which it was asked, what is the one particular thing which is not an inherent limitations of audit? Everywhere this was given, and three options this were given as the inherent limitation. Fourth option was poor corporate governance. Now poor corporate governance is basically the persons at the top, the management, the TCWG, they are not governing the entity in a very good way. Now is that an inherent limitation of audit? No, that is not an inherent limitation of audit. This was an MCQ. Next, if there is a subsequent discovery of material misstatement after the audit is completed, which auditor was not able to find out, will we say that the audit was not conducted as per essays? No, we cannot necessarily say that. It does not indicate failure as per essays unless we have not performed the audit as per essays. How we will get to know? We will get to know from the audit documentation. Next is certain assertions of matter where it is difficult to detect the material misstatement due to ILA, inherent limitation of audit. What are those assertions, sir? 240, 250, 550, 570. 240, fraud where senior management or collusion is involved. 250, whereas there is non-compliance of law and regulation, we may not be able to identify it. 550, related party existence and completeness. And lastly, 570, future events or condition that make a significant doubt on entity's ability to continue as going concern. This we will discuss in your essay 570. Okay, yes. Next point is your professional skepticism. Now what is professional skepticism? Professional skepticism is maintaining a questioning mind every time, all the time. Each of the second that you are doing your audit, you need to maintain questioning mind. You need to question everything that the client is giving to you. You should not accept anything and everything client as it is. You should question everything about the client. Next is, you need to be alert to any condition that may indicate that there is a possible misstatement. You need to be alert while auditing. You should not be very lazy. You need to be alert while auditing. And third, you need to do critical assessment of audit evidence. You need all the audit evidence that you are getting. You need to critically assess those. You need to not just assume that all the evidence will be correct. You need to critically assess those evidences. So 3 points are involved in professional skepticism. How we will learn those 3 points are, we can understand it from the fraud. Suppose there is a fraud. Then first of all, we will have a questioning mind. We will question everything where there is a fraud is located. Then we will see whether there is a fraud which indicate that there is a misstatement in the financial statements. And if we think that there is a misstatement, then we will do critical assessment of evidences. We will critically assess all the evidences. Now, the question can also ask, what are the conditions which we need to be alert with? What are the conditions that may indicate possible misstatement? So what are the conditions, sir? Suppose I have obtained one evidence and there is another audit evidence and both are contradicting. I have obtained the external confirmation and I have the internal information from the entity and both the balances are not matching, which means there can be a misstatement. Secondly, the reliability of documents. I'm not able to trust on the reliability of the documents. The documents are not, I have a question on the reliability of documents, which means there can be misstatement. Suppose there is a possible fraud in any of the area, which means there can be misstatement there as well. Suppose there is any circumstances in which I have to perform more procedures other than those required by the essays. Suppose I have asked from a confirmation from a data and the data has sent me the confirmation, but I'm thinking that the confirmation was responded by any other data, not the data with which I have confirmed, which I have sent the confirmation request. So I'm calling that particular data and I'm asking, okay, did you respond to this confirmation request or not? This is a procedure that is in addition to the procedures that is given by the essays. So here in this particular case, there can be a misstatement as well. So these are the indications of misstatement. Now, how we will learn these 4 points, sir? So what are the conditions which may alert regarding the possible misstatement? Where can there can be a misstatement, sir? Where the evidences are contradicting. There is an evidence, both are contradicting. There is a documentation, and both are contradicting, which means I have question about the reliability of document. And in this particular case, there is a possibility that there is a fraud. And whenever there is a fraud, we need to perform additional procedures other than those required by the essays so that we can identify the fraud. Okay, yes sir. And the last point in professional skepticism is they are saying that you need to maintain professional skepticism throughout the audit. Throughout the audit, you need to maintain a questioning mind. Why, sir? So that you can reduce the risk of 3 things, so that these 3 risks can be reduced. What are these 3 risks, sir? The first risk is overlooking unusual circumstances. You are not ignoring unusual circumstances, you are identifying the unusual circumstances. Secondly, overgeneralizing conclusion. You are not generalizing your conclusion. Okay, last year this was done like this, so this year also this will be done like this. You should not overgeneralize the conclusion. And lastly, you are not using inappropriate assumptions while determining the NTE of procedure, nature, timing, and extent of procedures. You should use appropriate assumptions while determining the NTE. How we can remember these 3 points, sir? Over in. What is over in, sir? Overlooking unusual circumstances, overgeneralizing conclusions, and inappropriate assumption. Sir, you are saying that we need to maintain questioning mind and we need to question everything that is given by the management. Sir, I have been auditing this particular client for 3 years and the management is very integrity, management is very honest, sir. So should I just ignore this and just question everything? So ICI is saying no, beta. So if there is a past experience of integrity of management and TCWG, you should not disregard that experience. You should not ignore that experience, but still you need to maintain professional skepticism. That is also important. So professional skepticism is basically what? You are maintaining an attitude of questioning mind. You are being alert to conditions that may indicate that there is a possible misstatement and you are giving a critical assessment of audit evidence. Now, for what conditions we need to be alert to? First of all, there is an audit evidence, there is an audit evidence, both are contradicting audit evidence, or there is an information that questions the reliability of the documents, or there is a condition that there can be possible fraud, or there is circumstances in which you need to perform additional procedures other than those required by the essays. Okay, yes sir. Now, maintaining professional skepticism throughout the audit. Why is it necessary, sir? So that we can reduce the risk of over in. What is over in, sir? Overlooking unusual circumstances, overgeneralizing when drawing the conclusions, and using inappropriate assumptions when we are determining the NTA of audit procedures. Now, mind you, whenever there is a past history of past experience of honesty and integrity of management and TCWG, we should not disregard that, but still we need to maintain professional skepticism. Okay, yes sir, we will discuss this thought of the topic at the end of the lecture. Okay, yes sir, let's start with our essay 210, which talks about agreeing the terms of audit engagement. Now, what is agreeing the terms of audit engagement? Before accepting this audit, we need to agree some terms with the management, right? So that we can avoid the misunderstanding. I am assuming that the management will give me all the sufficient and appropriate audit evidence, and the management is thinking I don't need to give them sufficient and appropriate audit evidence. They will identify themselves. So this is a misunderstanding. So to clear any of the misunderstanding that might happen in the audit, we need to agree the terms with the management, and not with the management in the general life itself. Whenever we are doing any service, providing any services, receiving any services, we prepare an agreement so that there is no misunderstanding. So here also essay 210 talks about agreeing the terms of audit engagement. Now, before agreeing the terms of audit engagement, they are saying before accepting the audit, you need to see preconditions for audit. What is precondition for audit? These are my conditions for doing the audit. Without these conditions, I will not do the audit. So we need to see whether the preconditions are present in the organization itself. What is the precondition, sir? The first precondition is I have to check financial statements. So financial statements are prepared as per AFRF, and the AFRF is acceptable, which means what, sir? Suppose a profit-oriented entity is preparing income and expenditure account, receipts and payment account, which is prepared by an NPO entity, then it is completely false. Then the FRF is not acceptable. I need to see the FRF that is used by the management, whether it is acceptable or not. Secondly, I have to ensure that the management acknowledges and understands this responsibility. which means what? Management has a responsibility. Management know that it has a responsibility, and management understands its responsibility. What is management responsibility, sir? Management responsibility is to prepare the financial statements as per the FRF. Then I will check whether the financial statements are prepared as per FRF or not. Secondly, management has a responsibility to develop an internal control system so that the financial statements do not have material misstatement, which means the same thing that we have discussed just now. And lastly, the management will provide the auditor with three things. What are the three things the management need to provide us? All the information related to the financial statement. Management will provide us access to all the information that is related to the financial statement. Suppose while auditing, I have to ask for additional information, and all the additional information that the auditor is requesting, management should provide us. And lastly, management should provide us with the access to unrestricted access to all the persons within the entity. So if I need to ask, suppose I need to check litigation in claim and I want to go to legal team and I want to ask something to them, I should have an unrestricted access to ask to the legal team and obtain evidences from them. Okay, yes sir, these all is the management responsibility, and management should acknowledge this responsibility. This only then I will consider that yes, precondition is present and I can accept the audit engagement. Okay, yes sir. Now how we will remember this preconditions, sir? So obviously we are going to audit financial statements. So financial statements are prepared on the AFRF basis. So AFRF should be acceptable at least. Secondly, management is acknowledging its responsibility. What is the responsibility of management? Our main concern is financial statements. So financial statements should be as per AFRF. Secondly, the internal control should be such that the financial statements should not have material misstatement. And lastly, the management should provide the auditor with OW is basically what, sir? A for access to all the information, A for additional information, and U for unrestricted access to the person. Okay, yes sir. Now what if when I was checking this precondition, I got to know that the FRF is not acceptable, which means what? The precondition is not present. Then I should directly decline the engagement? No sir, I should first discuss with the management that your FRF is unacceptable. Suppose management change, then I can definitely accept it. But if the management is not changing, then I should not accept this particular audit engagement unless law and regulation requires me. If law and regulation says that I need to accept this particular engagement, then I will accept this particular engagement even if preconditions is not present, which means what? Every time in whole audit, law and regulation is a priority. Essays is not a priority. Law and regulation is a priority. Okay, yes sir. Next, suppose in the proposed audit engagement, the client is saying me that I will put limitation on scope in your audit. What is limitation on scope? I will not let you work in terms of what? He is saying that I will not allow you to check assets. I will not allow you to check any of the assets. So if we are thinking in the proposed audit engagement, the limitation of scope that the client has proposed us is will result in disclaiming our opinion. What is disclaiming our opinion? It is as good as providing no opinion. We will not be providing any opinion because we think that the possible misstatement, that the effects of the possible misstatement would be both material and pervasive to the financial statement. So here in this particular case, if the client is not allowing me to check assets itself, and if I'm thinking that here I will need to here I will be issuing disclaimer of opinion, then should I waste my time over here? If I already know that I will be issuing a disclaimer of opinion, should I waste my time? No sir, I should not waste my time. So I should not accept this particular audit engagement unless it is required by law and regulation. Okay, yes sir, let's discuss it from the concept book. Precondition for audit, they are saying that we need to determine whether it is present or not. So first of all, we need to see whether the FRF is acceptable, and secondly, we need to obtain agreement of management that it acknowledges and understands its responsibility regarding what, sir? First of all, that the financial statements are prepared as per FRF. Secondly, for that internal control, that the financial statements are free from material misstatement. And lastly, provide the auditor with OW is basically what? Access to all the information, any additional information, and unrestricted access to all the persons within the organization. Now there is an MCQ. Suppose there is a third party which is preparing the financial statements on behalf of the management, and when we went to the management to obtain an agreement, management told that since third party is also preparing the financial statements, so we will give a joint responsibility to you. Then can the auditor accept joint responsibility from the management? No. For us, it is the management who has the whole and sole responsibility for preparation of financial statements, so we cannot accept joint responsibility. We will tell to management, we want your individual whole and sole responsibility for the financial statement. And if the management is not giving us that, then we will not accept this particular audit engagement. Okay, yes sir. Next, if precondition of audit are not present, we will discuss with the management. We will not accept the proposed audit unless required by law and regulation. And if there is a limitation on scope such that it will result in disclaiming an opinion, then we should not accept the engagement unless required by law and regulation. Okay, yes sir. Now if the precondition for audit are present, there is a auditor's appointment process. You need to look at over here. You need to see this auditor's appointment process. That will make everything clear. So they are saying, first of all, the auditor is appointed by shareholders in the AGM. After it is appointed, the TCWG sends an appointment letter to the auditor. Appointment letter is received by by the auditor. Now when the appointment letter is received, auditor checks everything like the SQC1 acceptance and continuous, the integrity, the compliance with the ethical requirements, the CCTR, the significant matters, the precondition for audit. Auditor checks everything, and if he decides that he need to accept this particular engagement, then he accepts the appointment letter. And after accepting the appointment letter, the auditor sends an engagement letter to the client. This engagement letter has the actual terms of our engagement. Now why this engagement letter is sent? So that we can avoid the misunderstanding. This is your main part. Okay, auditor sends the engagement letter, not the client. Auditor sends the engagement letter to the client. Okay, yes sir. Now what are the terms of the engagement letter, sir? It describes our auditor's responsibility. It describes what is the responsibility of management. It describes what is the objective and scope of audit. It describes what is the AFRF according to which the financial statements will be prepared. And lastly, it also gives the expected format and content of the audit report. Yes, in the engagement letter itself, at the start of audit itself, I need to tell them that this will be format of my audit report and this will be the content of my audit report. Now sir, how we can say that, sir? After auditing, we can see that if we have to give modified opinion, then what, sir? Then how we will see, how we will give them the expected form and content. So here we will also include a statement that there can be circumstances where the report can be different from the expected format and content. So with that precaution, with that disclaimer, we give them the expected format and content. Okay, yes sir. Now, what if law and regulation prescribes the terms of engagement in detail? If the law and regulation that is applicable on that particular entity is prescribing this terms of engagement in detail, then do we need to again ask the management to confirm this terms of engagement? No, sir. We do not need to again ask the confirm the management. Provided that law and regulation is applicable on that entity and the management is accepting the responsibility for the terms of engagement, then we need not to again record the terms of engagement. Here, how we will learn this terms of engagement letter, sir? First of all, there is our responsibility. Then we talk about management responsibility. What is our responsibility, sir? Regarding the objective and scope and regarding the audit report. What is management responsibility, sir? AFRF ke financial statements are prepared as per AFRF, and the AFRF identification we have to do in engagement letter. Okay, yes sir. Let's discuss it from the concept book. Now we have to talk about the agreement on audit engagement term. Audit engagement letter is sent by whom, sir? Auditor. To whom, sir? Client. Okay, why, sir? To avoid misunderstanding. What are the things included? A responsibility of auditor, which includes objective of scope of audit and the expected format and content of the report, with a statement that the circumstances can happen where the expected form and content is different from the main report. Okay, yes sir. Next we have to talk about the responsibilities of management, and we have to identify the AFRF for the financial statement preparation. Now if the law and regulation is prescribing in detail the terms of above, then we need to not record these terms in an agreement, provided the law and regulation is applicable on the entity and the management is acknowledging its responsibility. Now here, suppose, can the auditor accept this appointment letter as an engagement letter? No beta. Auditor has to separately send this engagement letter to the client. He cannot accept the appointment letter as an engagement letter. Okay, yes sir, this was asked in your MCQ. Okay, yes sir, we have to do question number 15. Here is your question number 15. Here is your question bank. This is your question bank. The way you're seeing the question bank on your screen, the same way we prepare our question bank, which means that all the questions are highlighted and all the questions are answers are also highlighted in the color coded format. The sources are also mentioned in the color coded format. The topics is also mentioned after each and every topic. After each and every question we mention the topic, so that you know which particular question belongs to which particular topic. So okay, you can directly do that particular question from the after that particular topic. Okay, yes sir. And we have a part 1 and part 2 of the question bank. Part 1 contains all the interpretation, all the analytical question. Part 2 contains all the direct question, which you can skip. Okay, everything that we do with quality only. Okay, so here the question is MEA Limited, that is the client, is issuing the engagement letter to the auditor. Okay. And in that engagement letter, what all things are mentioned? The objective and scope of audit, the responsibilities of auditor, the identification of FRF, and the expected format and content of report. What is the discrepancy in the particular audit engagement letter? So basically 4 things are mentioned in the engagement letter. One thing is missing, that is your management responsibility. So your management responsibility is missing. And the second thing which you have caught till now, that is your client is sending the engagement letter to the auditor. Does the client send the engagement letter? No sir, the auditor sent the engagement letter to the client, but here client is sending the engagement letter. This is also one of the discrepancy. So the answer is what, sir? As per essay 210, we have written the 5 things that is covered in your engagement letter. Then we have discussed in the given case what has happened. In the given case, there is no marks. And lastly, we have said that the engagement letter does not specify the responsibilities of the management. Sir, ICI has not mentioned that this engagement letter was sent by the client, which is wrong. No, ICI has not mentioned this particular thing, but we as a student could have mentioned at the last that the one more discrepancy was there, that the engagement letter was sent by the client. Instead, it was to be sent by Mr. X to MEA Limited. Okay, yes sir. For this particular point only, I I have picked up this question to be done from the question bank in the revision video itself. Okay, yes sir, I hope you understand my point. Now what if there are some changes, or what if the management is coming to you and asking you to change the terms of engagement? Management is saying you, now you are doing audit, no, we do not need audit, now you do review, or if you are doing review, now you do related services. So management is changing your terms of engagement. Then what we should do? First of all, why the management wants to change the terms of engagement, we need to see. There can be situations, different reasons for management to change the engagement. First of all is there is change of circumstances. Now the management does not need the services. Suppose there was a bank loan which the management wanted to take. For that, the bank had a condition to do the audit, and that's why the management was doing the audit. Now the bank has a condition, we do not need to do the audit. So the management is changing to related services. They are saying that you don't need to do audit now. So there is a change in circumstances. Secondly, there is a misunderstanding regarding the nature of audit. Management thought that we will be auditing from very superficial level. They didn't know that we will be auditing in detail. So they are saying, no, you don't need to audit in at a detail level. You need to change your engagement to review related services. Or thirdly, and the last, that there is a restriction on the scope. Management wants to put restriction on the scope. Management don't want us to check in detail. Management wants us to hide something from us. Suppose I was checking data and I got to know some misstatements, and I asked the management the misstatements, and then management is asking me to change the terms of engagement. And this restriction on source can be either from the management or due to the circumstances. Suppose there was a fire and all the records were buried, so there is no records and there is a restriction on our scope. So this particular thing these two particular situation can be identified as a reasonable justification, but this particular thing is not a reasonable justification. If the management is providing us information which is incorrect, incomplete, or unsatisfactory, then it is not a reasonable justification. Okay, yes sir. Now what is the exact process, sir? The exact process is if the management is asking you to change to a lower level of assurance. What is a lower level of assurance? I am doing audit, management is asking me to change to review. I am doing review, management is asking me to change to related services. If that is a particular case, then I have to see whether there is a reasonable justification or not, whether it is reasonably justified to change to this particular engagement, whether management has a good reason to change this particular engagement or not. And then I will have to assess the legal implications as well, whether it is contractually possible for me, legally possible for me to change the engagement or not. Okay, yes sir. Suppose there is a reasonable justification is there, then the report that I am preparing, suppose from audit I am going to review, then the report that I am preparing in the review engagement should exclude the reference to the original engagement, which means in the review report I should not mention anything about the audit that I have done for 1 or 2 months, maybe whatever time. Secondly, in the review report, I should not mention about any of the procedures that I have performed in the original engagement, which means in this particular case, audit engagement. So I should not refer original engagement. I should not refer original procedures unless it is an agreed upon procedure. Unless the new engagement is an agreed upon procedure, I can refer to the procedures. Why this is done? So that there is no misunderstanding. Otherwise, in the review engagement, the users will be when your users are reading your report, they will be confused. Okay, you are doing 2 months audit and 10 months review. What is this? So that the users do not get confused, we do not include any reference to the original engagement and original procedures. Okay, yes sir. Next is, what if there is reasonable justification? What if there is no reasonable justification? There is a deadlock. I am not accepting the change in engagement and management is not allowing me to continue the audit. Then what we will do, sir? There is a deadlock, so we will withdraw. We will resign from this particular engagement and we will see whether we need to report it to the TCWG owners or regulators. Okay, yes sir. Next, there is a concept of recurring audit. What is recurring audit? I am only auditing the entity from year to year. Now, in the first year, we did a agreement on the engagement letter. Now every year, do we need to change an engagement letter, or we need to send the engagement letter to the entity? No, they're saying no, you don't need to change or send the engagement letter every year to the entity unless there are factors. There are some factors where you need to revise the terms of engagement or where you need to remind the terms of the engagement to the entity. Now, what are the factors we need to consider? First of all, what is the situation where we need to remind the entity of the existing terms? When we think that the entity is misunderstanding the objective and scope. In the last audit engagement, the way the entity has behaved, we think that the management is misunderstanding the objective and scope. So we need to send them. Lastly, in terms of revised, if there is any revised terms of engagement letter, then we need to send them. If there is a change in the senior management, if there is a change in the ownership, if there is a change in the nature and scope of the business, suppose there are multiple industries that are involved from this particular year, then we need to change the engagement letter. If there is change in ownership, then we need to change or we need to send the engagement letter. If there is change in senior management, then we need to tell them this is what the engagement letter is. If there is a change in legal and regulatory requirements that is applicable, then we need to change the engagement letter. FRF change, suppose from AS financial statements, they are going for India's financial statements, we need to change the engagement letter. Any other reporting requirement, we need to change the engagement letter. How we will learn this, sir? First of all, in terms of reminding, if the entity is misunderstanding, then we need to remind. In terms of revise, if there is a revised engagement letter term. Now, if there is a change in business, business, or if the change in laws on the business. In terms of business, there is a change in the senior management or the ownership, or there is a change in the business itself, which means there is a change in nature or scope. In terms of law, there is a change in legal or regulatory requirements. The biggest legal or regulatory requirement is FRF, or there is other reporting requirement in which there is a change. Now, if there is a change and the entity is asking us to change the terms of engagement, here we will assume that there is a reasonable justification. Here we will say, yes, it is reasonably justified. If this is a particular change and that's why we want to change the engagement letter, then it is reasonably justified and we can change the engagement letter. Okay, yes sir, this was your SA 210. Let's discuss it from the concept book itself. What we have to discuss, sir? We have to discuss from above acceptance of change in terms of engagement. So they are saying that why the entity will request a change in terms of engagement for 3 reasons. First of all, there was a change in circumstances. Now they don't need the service. Secondly, there was a misunderstanding regarding the nature of audit. And lastly, there is a restriction on scope which either the management is imposing or by the circumstances. In the first 2 cases, we can consider that there is a reasonable basis for change, but reasonable basis does not exist when the information is incorrect, incomplete, or unsatisfactory. Okay, yes sir. Now, if before completing the audit, we are requested to change to an engagement which provides a lower level of assurance, then we need to determine whether there is a reasonable justification. And before agreeing to change the audit to the review or related services, we need to see our legal and contractual implications as well, whether it is possible for us legally and contractually to change to review or related services. Okay, yes sir. Next, if there is a reasonable justification to the change from audit to related services, then to avoid any misunderstanding, when we are preparing report for the review or related services, we should not include any reference to your original engagement or any of the procedure that were performed in the original engagement except for agreed upon procedures. In case of agreed upon procedures, we can do that. If there is non-agreement to change the terms of engagement and the management is not allowing us to continue the engagement, then we should withdraw from the audit if the possible, and we should determine whether there is any responsibility to report to the TCWG owners or regulators. Okay, yes sir. Next, in terms of change in terms of engagement, in terms of recurring audit, what are the factors that can help us in changing the terms of engagement or reminding the entity of the existing term? This is also important topic for you. Agreement on audit engagement term is important and precondition for audit is important. Now we assume that there is a reasonable justification. Now what are the factors of when we need to remind when the entity misunderstands the objective and scope, when there is a revised or special terms of engagement, when there is a change in business or there is a change in law. In terms of business, there is change in senior management, change in significant ownership, there is a change in size and nature of the business. In terms of law, there is a change in legal or regulatory requirements, there is a change in FRF, or there is a change in other reporting requirement. Okay, yes sir, this was our essay 210. We will be discussing the thought at the end of the lecture. Now let's have 2 sips of audit. We generally have 2 sips for life. We are having 2 sips for audit because we are doing audit. Okay, chaliye. So here we are discussing now the essay that is one of the important essays out of the 3 essays, that is essay 230, audit documentation. Now why we have to do audit documentation, sir? Suppose there is a person who asks us, oh auditor, you have done this work, now prove me that you have done this work. How will we prove them that we have done the audit as per essays? How, when there is an investigation by the NAFRA, how we will prove them that we have done the audit as per essays? If there is a fraud discovered after the audit, how we will prove them that we have done the audit with essays? We will prove them by our audit documentation. In big fours and big companies, it is already assumed that if you're not documenting something, then the thing was not done. So everything that you're doing, you need to document. So here, to prove that the audit was conducted as per essays, we need to document everything. Okay, yes sir. Now, can it be said that the audit documentation is a substitute for the entity's accounting record? If we are preparing documentation, then we need to not prepare entity's accounting records. No, sir. Entity accounting records and audit documentation are 2 separate things. They are not substitute of each other. First thing is this. Secondly, audit documentation does not include these 3 things. What 3 things are not included? First of all, any draft of working paper and financial statements. So suppose I am preparing a working paper and I am just changing the working paper to another version and then another version. Do I need to keep all the versions, all the draft of the working paper in my audit documentation? No, sir. Suppose there is a financial statement, initial financial statements, we have made some changes in the financial statement. Do I need to keep all the versions of the financial statements in the audit documentation? No, sir. We need to just keep the final version of the working paper and the final version of the financial statements in our audit documentation. Secondly, suppose there was some notes which depicts my incomplete thinking, the preliminary thinking. When I started the audit, I was thinking something and I just noted down somewhere. So will that particular notes be considered as part of my audit documentation? No, sir. They should not be included in audit documentation. And lastly, suppose there there is a document, suppose there is a final version of financial statements, but there was a typographical error and we corrected the typographical error. Now this is the final version. Do I need to include the uncorrected typographical error financial statements or any of the document? No, sir. Suppose, sir, second thing is there is a final version of financial statements. Do I need to include the duplicate of the documents in the audit documentation? No, sir. So which means what? If you will study these three, then we will get to know that in the audit documentation we just need to include one copy of the final version of everything, of every report, every document, every working paper, every financial statements. We need to include just one copy, and that should be the final version only. We need not include any versions or any draft versions of any of the documents. Okay, yes, sir. Now, the thing is, when do we need to prepare the audit documentation? Can we prepare the audit documentation after the audit? Which means what? Just preparing the audit report. We are preparing the audit documentation. We have completed the audit documentation. Then we are giving our audit report. Is it allowed? No, it is not allowed. It is said that you should do timely preparation of audit documentation as the audit progresses. As soon as you are doing auditing, as and while you are auditing, you need to prepare the audit documentation with that itself. Why, sir? So that you can enhance the quality of the documentation. You can mention more things which are at the top of your mind. And secondly, it is for effective review as well. As soon as you have documented, you can go to your senior to check the work, and they can directly check. Otherwise, if you're not documenting, who will check your work and how they will check your work? And lastly, audit documentation that is prepared after the work is performed is less likely to be accurate. Which means what, sir? Suppose I have, obviously, sir, whatever we have read yesterday, we are not able to remember everything, or we are not able to keep it in our head. So suppose you are performing any procedure which was 2 or 3 months ago, and now you are preparing the audit documentation. Will it be accurate? No, sir. The more accuracy will be there when you are preparing the audit documentation as soon as you have done that work. Okay, yes, sir. So if in the question it is asked that the audit documentation was being prepared near the date of audit report, will it be allowed? No, sir, it will not be allowed. Here, remember, audit documentation is different and final audit file is different. Audit documentation is different and final audit file is different. Final audit file is prepared after auditor's report. Audit documentation is prepared with the audit. Okay, yes, sir. Don't confuse between the two. Now let's discuss about assembly of final audit file. What is a final audit file? So basically all the audit documentation that is prepared by all the team members are gathered together, are compiled together in a final audit file, so that if in the future we want to review that particular audit engagement, we can directly refer to this final audit file. Okay, this is called assembly of final audit file, and this is an administrative process, which means we do not have to apply our brains into it. Okay, yes, sir. Now here SQC1 says that the final assembly of final audit file should be on a timely basis after the reports is finalized. After the report, we have issued the report for that particular standard, we need to prepare a final audit file on a timely basis. What is a timely basis, sir? That is not given over here, but specifically for audit engagement, 60 days is the amount that is given over here, up to 60 days after the date of audit report. Now I have a question for you. Let's see who answers it correctly. Suppose my audit report date is 1st May. What will be the 60 days considered? What is that day when I need to prepare my final audit file, when my final audit file should be ready? What is the 60th day? I want to know this. This is a question from your Intel law date wala thing. Okay, yes, sir. So you need to answer this particular question in the comment box. Let's see who answers it correctly. So 60 days after the date of audit report. This is given only in case of audit. For other services there is no timeline, just it is written timely basis. Okay, yes, sir. Now suppose I am auditing standalone subsidiary, then there is a standalone audit report, and then there is a group audit report. So for those two audit report, the same timeline will be counted separately. Which means what, sir? If there are two audit reports, suppose there is a standalone audit report and then there is a group audit report. For both the audit report, if they are on the same subject matter, because the audit report that I have prepared are on the subsidiary financial statements only. So if there is a same subject matter, two audit report, then the time limit will be counted separately. Suppose the standalone audit report is for 1st April, then 60 days will be counted for 1st April for this final audit file. And if the group audit report is suppose 1st May, then 60 days counted will be from 1st May for this particular group audit file. Okay, yes, sir. Next is what, sir? This assembly of final audit file is an administrative process, which means what, sir? We cannot perform any procedures, we cannot perform new conclusions in this particular circumstances. Why, sir? Because we have already issued the audit report. After issuing the audit report, we are just assembling the audit file. We cannot perform any procedures, because after performing the procedures, what we will do, sir? We have already issued the audit report, but we can make some changes if the changes are administrative in nature. So see in question, if the changes are administrative, where we do not have to apply any of our brains, then we can do that changes. Four examples are ICI given over here. First of all, suppose you have obtained any of the evidences before the date of the audit report. You have discussed that audit evidence with the team as before as well, but you just forgot to document that audit evidence. Then you can definitely document this audit evidence, because it does not apply your brain. Second is what, sir? You need to sort your working paper, you need to collate your working paper, you need to just cross-reference your working papers. Then you can do that. This is an administrative nature. Next, you need to delete the superseded documentation. You need to delete the draft version of all the documentation, that you can do that. Obviously we cannot keep the draft versions in our audit documentation, and that is also an administrative process. And lastly, you need to just sign off on the completion checklist. There is a completion checklist. The task is mentioned, what task you have to do, and you have to just sign off on this completion checklist. That is also allowed because you don't have to apply your mind over here. So these 4 changes are allowed. What are the 4 changes, sir? Evidence which was obtained before, sorting, collating, cross-referencing, deleting the superseded documentation, and signing off the completion checklist. These 4 changes are allowed. Okay, yes sir. Now sorry, I have prepared the final audit file. Now, for how long I need to keep that final audit file with me, because I don't have much storage, so I need to delete that file. So can I delete that file right now? No. The final audit file, the retention period for the final audit file is at least 7 years from the date of auditor's report. The auditor's report, from the auditor's report date till 7 years, you need to keep your final audit file. But sir, my entity is a holding company, subsidiary company, associate company, joint venture company, any of the company, then you need to count this particular date, either the auditor's report date or your group auditor's report date, whichever is later. Suppose the auditor's report date is 1st April and the group auditor's report date is 1st May, then the 7 years will be counted from 1st May, and I will have to keep my engagement file for 7 years from the 1st May. Okay, yes sir, whichever later date we have to choose, and this is in your MCQ as well. Okay, yes sir, let's discuss it from the concept book. We are discussing SA 230 audit documentation. What it says, sir? They are saying that the audit documentation is not a substitute for your entity's accounting record. We do not include any superseded draft of any working paper of financial statements, any notes that reflect our preliminary or incomplete thinking, any previous copy of any documents which have been corrected, or any duplicate of the documents. We do not need to keep any of the duplicate, any of the draft versions. We just have to keep one copy of final version of all the documents. Okay, yes sir. Next, this is important, timely preparation of audit documentation as the audit progresses, so that we can enhance the quality of the documentation, and it is also effective. We can also conduct effective review. Now the documentation which is prepared after the work has been done, it is less accurate than the audit documentation which is prepared as the audit is progressing. Okay, yes sir. Next, this is also important, assembly of final audit file. Now the complete assembly of the final engagement file should be on a timely basis after the report is finalized, and this is for other than audit engagement, because for audit engagement 60 days are counted. So within the 60 days, final audit file should be prepared after the date of auditor's report. This is given in your SKC1. Now suppose there was the auditor's report date is 1st May, and on the 10th May you made some changes in your audit documentation. Now the 60 days will be counted from the auditor's report date, or the date when you made your last changes. This 60 days will be counted from the auditor's report date only, not from the date when you made the changes. And this was your MCQ, which I have written over here. Next is, sir, if there are 2 reports on the same subject matter, then this 60 days will be applicable separately for each individual report. Suppose we are preparing 2 reports, one for standalone financial statements, one for group, then on both the reports the time limits will apply separately. Okay, yes sir. This process is administrative process, and we need not perform any new procedures or draw any new conclusions. However, if we want, we can make some changes if they are administrative in nature. For example, we can document the audit evidences that we have already received, already discussed prior to the audit prior to the date of the report. We can document them now. Next is any sorting, collating, or cross-referencing working paper, any sign off on the completion checklist, and any deleting or discarding of superseded documentation we can do. I am just repeating now that SA 200, 210, 230, you just have to what we can say, you just have to understand them. You don't have to memorize anything. You need to understand all these things. Okay, yes sir. Now SKC1 says that the retention period of audit should not be less than 7 years, which means it should be at least 7 years from the date of auditor's report, or if your group auditor's report date is later, then from the date of group auditor's report. Okay, yes sir. Now let's talk about ownership of documentation, which is an important topic. What does ownership of documentation talks about? It says that the documentation, who is the owner of the documentation that we have created? Obviously, since it is created by us, so we have the ownership of the document. It is the property of the firm unless required by law and regulation. If the law and regulation says anything, then we will understand that, we will follow that. But otherwise, law and documentation is the property of the firm itself. Now, can a client ask the audit documentation from us as a right? No, client cannot ask us, because we are the ownership of the audit documentation. But if we want, at our discretion, we can make extracts of the audit documentation available to the client. But before making the extracts available to the client, you need to consider whether it is undermining the validity or our independence. Which means what, sir? Suppose I am giving my audit documentation to the client, and client is saying, what work you have done? You have not done the work correctly. That should not have happened. You should consider that, and then only you should provide your working papers to the client. Okay, yes sir. Next is what, sir? Engagement documentation, which I told you in SQC1 that we will be doing in SA 230. Now this is that particular topic. This is engagement documentation. What they are saying, sir, you should keep your engagement documentation confidentiality, which means you need to keep it away from everyone else. anyone else cannot be able to see, should not be access your audit documentation. Secondly, it should be in safe custody, it should be safe carefully saved. Next, it should be accessibility, which means what, it should be accessible as and when required. Next is integrity, which means what, there should be no unauthorized changes in the audit documentation. And last is retrievability, which means what, you need to keep backup and all, so that if you want to retrieve the audit documentation, you can directly retrieve that. So there are 5 what you can say features of the audit documentation that we need to maintain: confidentiality, safe custody, accessibility, integrity, and retrievability. Okay, yes sir. Now you need to ensure that without the firm knowledge, the audit documentation is not altered, not changed, not added, or not deleted. We need to maintain such strict controls on the audit documentation that without our knowledge, these things cannot happen. Now there are circumstances when the CAs, currently itself the CAs are maintaining their audit documentation in physical files. Now if the audit documentation is maintained in physical files, some of the audit documentation is maintained in electronic files, and the physical files are not being scanned into the electronic file. Scanning means what, a paper is there and you are just clicking the photo and you are pasting in your electronic file folder that is there in your computer. This is not being done. If this is not being done, then we will not be able to know what was the source of the information, whether the information was originated from the client or whether we were the one who originated that information. Why it is important, sir? Because if the information source is client, then we cannot trust that information fully, because we need to question the client, as we have studied in the professional skepticism. So here, if this is the case that the physical files are not scanned or incorporated or cross-referenced to the electronic files, then what we need to do, sir, we need to generate the scanned copies. We need to generate the physical copies of entire content of the physical files. We need to integrate these scanned copies into the engagement files, and then we need to ensure that these scanned copies are also retrieved and can be printed anytime that we want. Okay, yes sir, these are the 3 things that needed to do when the physical files are not incorporated into the electronic files. What are the 3 things, sir? Look at over here, just last topic, sir. What are the 3 things, sir? First of all, we need to generate the scanned copies from the physical file. We need to integrate the scanned copies into the engagement files, and we need to ensure that the scanned copies are retrievable and printable whenever we want. Okay, yes sir, this was your topic regarding the engagement documentation. And last topic that I want to tell you is, sir, suppose there is a large audit engagement, we have prepared a final audit file, and after 2 to 3 years, we want to review that particular audit engagement. Will I be need to go to entire audit file and we need to go to entire audit documentation to review that particular engagement? This will be a very tedious task. So here they are saying, for large or complex audit, what you need to do is you need to prepare an audit documentation summary. You need to prepare a summary which should be kept at the top of that particular final audit file. This is also called completion memorandum. What it is called, sir? Completion memorandum. In that completion memorandum, what we will write, the significant matters that were identified during the audit and how they were addressed, so that anyone who is coming to review that particular final audit file, they can just know about the significant matters and they can just directly review those matters only. They don't have to perform much more work, because it will make our review and inspection effective and efficient. Which will make our review and inspection effective and efficient? Your completion memorandum or audit documentation summary. Okay, yes sir, this was it for your essay 220. Let's discuss it from the concept book itself. What we are saying, sir, we are saying about ownership of audit documentation. This is important. They are saying that the SQC1 says that unless it is otherwise provided by law and regulation, the documentation is a property of the firm. At your discretion, you can provide the extracts to the client, but ensure that this does not undermine your validity or the independence. Okay, yes sir. Next, suppose, sir, I am doing audit for this particular client, and the next year I was not the auditor. Then the client asked me to send back the working paper because working paper contained their confidential information. Then should I send back the working paper? No, you are the ownership of the working. You have the ownership of the working paper, even if the client was your ex. Even if it was your past client, you need not send the working paper to the client. It is your ownership. Okay, yes sir. This was a MCQ that was asked. In terms of engagement documentation, SQC1, 5 features that we have to maintain of documentation: confidentiality, safe custody, integrity, accessibility, and retrievability. We need to ensure that without our knowledge, the documentation is not altered, added, or deleted. Next, when the physical files are not scanned, they are not incorporated, they are not cross-referenced with the electronic files, it is difficult to identify the source, whether the particular information was coming from the engagement team or from the management. So here what we need to do is, we need to generate the scanned copies of the entire document, entire original document. We need to integrate the scanned copies into the engagement files, and then we need to enable the scanned copies needs to be retrieved and printed. Okay, yes sir. And lastly, they are saying about completion memorandum or audit documentation summary. They are saying that we need to prepare a summary in which we have to write the significant matters that we have identified and how we have addressed this matter, and this summary will help us in effective and efficient review and inspection of the audit documentation. Okay, yes sir. Here we complete our essay 200, 210, 230. I hope you definitely loved it. If you loved it, please like the video. The like target is 250. I am sure you will definitely help me to achieve the like target. If you are coming till last, so please, I want to know how many students watched till last. So please comment down. We will become chartered accountants so that I can know that you have watched till last. And do please give your feedback. That will definitely help me to improve myself and post more English revision videos for you guys. Now, just before going, since you have walked till last, just last 2 minutes I want to take off yours by saying all the free resources that we have. These are the free resources for November 26 and onward of them. These are all the free resources, and the clickable links are there already included in this particular PDF, and this particular PDF is already uploaded in the Telegram channel. You can definitely access from there, and all the videos, all the resources are there on our YouTube channel and the Telegram channel, which you can definitely directly refer from this particular video, from this particular PDF. In terms of paid resources, we have an exam oriented batch currently of 45 hours, which covers 100% concepts and 100% questions. We will be launching soon more batches for English as well. Next, in terms of concept book, you know about this concept book. You have studied from this concept book. In terms of question bank, I already told you regarding the part 1 and part 2, and we have a color coded question bank that is completely fine and relevant to you. You can directly order. In terms of handwritten notes, that will be available in your Telegram channel, and we are soon going to launch a printed version as well. In terms of test series, we have all subjects test series for CA final. First, we have cumulative test series, in which you will give 3 tests for 30%, 2 tests for 70% syllabus, and 1 revision for 100% syllabus. In full syllabus, we have 4 full syllabus revision series, and we have 10 days challenge, where each subject you can complete in 10 days with all the mock tests and everything, so that you get the confidence. Here you can find all the details. We do detailed evaluation, question by question, and an overall evaluation by the CAs, and the paper are as per ICI paper level. The comparative analysis is given to you, which means question by question you will get to know what are your marks, what are topper marks, what are average marks, what are top 10 percentile marks, what are top 25 percentile marks. You can watch it from here. If you want someone, a friend come guide, come mentor, to be there with you, to maybe push you, to make planners for you, to guide you, to motivate you, to keep you in discipline, to pressurize you, everything we do in this one-on-one mentorship program. And there was a 62% passing percentage in January 26 attempt, which was a difficult attempt of ICI. Here you can get all the details, and per student we have cash prizes of 1,20,000. All the details are there in the pinned comment and this particular link as well. You can definitely check it out. And after you are giving your CA final exams, we are having resume, interview, LinkedIn, everything planned for you in our Career Navigator program. And once you become a chartered accountant, we are there to felicitate you and do a party with you in our felicitation fiesta. So your audit in AFM is going to be our responsibility. In AFM, in English, we are planning very more things in very soon. So you can definitely watch out Nikhil sir as well. In terms of my number, you can definitely ask all your queries on this particular number, 9023725601. Okay, on the WhatsApp itself. And after doing all this, after watching this revision video, you can directly practice all the questions, and all the questions will be very butter to you. And important topics we have already marked you, and those important topics that I have marked are general topics. Attempt wise specific, we issue attempt wise specific most expected topics, and we will be issuing for your attempt very soon. And lastly, just about the thoughts, first of all, in terms of essay 200, when there is no evidence, there is no opinion. So when there is no effort, there is no result. So you need to make so much efforts that ICI can or ought to deliver the results in your favor. So are you ready to make those efforts, is my question to you. Next is in essay 210, clarity. There should be a clarity before the engagement, just like there should be commitment before the success. Before you get the success, before you get the CA degree, you should be committed to yourself. You should be committed to this particular degree, and then you will get this particular degree. And lastly, in terms of essay 230, as auditors, document every detail. CA students must document every mistake. Every mistake that you are doing, you should document, so that you are not doing that mistake, in particularly in your ICI exams. Which means what? You should give mock tests, and all that mistake that you're doing in your mock test, you should definitely document them, so that you're not doing in your ICI main exams. And let me tell you, we have this feature in our test series dashboard itself, that in the dashboard itself, paper wise, you can mention your feedbacks, your mistakes in that particular attempt, in that particular paper, and you can download that as well. You don't need to maintain any separate diary for all the mistakes in your mock test, that we have provided the facility. Okay, yes sir. So this time we will get exemption and audit. Please keep me in your prayers. We will definitely become chartered accountant. Thank you so much. Bye-bye.